Spooktober is really going back in history and looking at moments like 1929, the Great Depression, the beginning of the stock market drop. How do ghosts stay in shape?
How to go stay in shape? I have no clue.
By exercising.
With that amazing joke, we'll kick off our episode of Money Chat with Friends, a podcast brought to you by Investor. At Investor, we offer personalized financial planning and investing. And at the end of the month, we do this monthly wrap up of what happened in the financial markets. Every week, though, we produce a newsletter, and you'll get it every Saturday in your inbox with the highlights of the news that are important for you to consider when investing and just like good things to be aware of at the end of the week. I'm Laura and I'm joined today by Joyce, my co host.
I will stop with the dad jokes.
We are at the end of October, beginning of November by the time you get to watch this video. Time is flying and so much happened in October.
Yep, that's true. And October is known for the financial chaos, right? We call it Spooktober. Spooktober is really going back in history and looking at moments like 1929, the Great Depression, the beginning of the stock market drop. And things like that happened again in 1987. It happened again in like 2000. Right now, it does look like a Spooktober moment, but it's actually not as bad as October has a lot of reasons for being spooky.
I can see that, but it's good to mention that it's all kind of like coincidental. The
Yeah,
energies and things aligning for it to happen in October. There's some theories, like our own theories, right? People coming back after the summer, also earning reports being published during this month. And all that has the capacity of influence what's going on in the market. Although if we look back at the different crises, they each of them had a very specific trigger that goes beyond some of these things that we just mentioned.
yeah, absolutely. The reasons for all of those stock market crashes are very different and almost in different asset classes altogether, right? The Great Depression, that was a run on the banks, that was the stock market drop, but 2008 was the housing crisis, right? Completely different. And that was because of subprime mortgages that were written and very risky products that were sold. You pointed out a couple of things like earnings. Earnings just happen for a lot of big companies, and we wrote about this on our newsletter this past week. And the Magnificent Seven, which are some of the biggest stocks that we know, such as Facebook, and we'll talk about it later today too, Amazon, and Google. Those companies just reported earnings, and they all have very mixed returns and very mixed signals into the markets, and that led to a further drop last week, actually.
I would love us to talk more about the earnings season and what it means for the market and especially for people that are actively investing, and what are the things that this season inform us and how we can make the most out of this data. This happens every quarter, and you will normally get these reports around January, April, July, and October. All big companies that are trading are pretty much mandated to publicly release the information on their earnings.
This quarter is specifically important is because we're towards the end of the year, right? So it's reporting on Q3, which now you've had a significant portion of the year already behind us. We already know how well the companies either did or did not do for the year, how much sales or revenue they've already brought. This is a pivotal moment for a lot of companies, not to mention in accounting world, it's also the end of the year for many companies. It has a significant effect on the stock market in general. From an investor perspective, right, it's so important to know about earnings for a couple of reasons. Depending on what you're investing in, you want to keep an eye on how well that company is performing, signify where the stock goes from there, whether it's going up or down. So for example, if you buy a stock, that company reports poorly because they, dropped in sales. The most important part is actually the commentary that comes out of every single earnings report, right? Every company has to put out a certain amount of data. Some companies will say, look, we're facing really tough times and we might have to lay off a few people, or shut down some warehouses. I mean, depends on what you're investing, right? And thinking about how that's going to reflect on the stock market. If it's negative news, the stock is likely going to drop. And you, as an investor, you have to be aware that these moments of like data coming out every quarter will shape or shift the price of that stock. It's important to know it's there, but not always trade on it. It's just a moment in time and just one data point that perhaps might drop that or that might rise that stock. You might rush to sell or buy, or even do other things like buy options or sell options. It's important to realize that there's a lot of information coming out during earnings, and it can really change the price of that stock.
Based on that, make a decision whether or not that stock is right for you. So earnings is one data point that can serve you on a decision. It has different angles, right? You cannot analyze it as an independent factor for a company. So for example, it's also good to see how is performing versus their competitors. It might be a difficult year for that specific industry category. So if you're analyzing it as an individual factor alone, it's probably just not right.
Reflects the best price, the best information that it has in the time. Last week, a lot of companies reported, and it took some time for analysts on Wall Street to read that information. Today, the market's opening, the futures are higher. It's Monday, it's 9:50. The market's just open. Futures were higher before we started recording. And that's analysts saying, like, it isn't all bad news. We took the time, we analyzed, it isn't all bad news, sector by sector, stock by stock, and here's what we think. But that might not last. By the time this podcast is reported, the market could be trading sideways or it could be crashing again. On Friday, we entered a bit of a correction territory on the S&P and Dow, and that's important to know too, because stocks were dropping so fast with earnings coming out at the same time. This next week could be completely different. November could have a completely different taste to it, whether it continues that trend or it reverses.
To add on that, we're amidst a very complex global political situation with new wars coming into the picture in October, which is incredibly sad to see and always sad to even mention. But all these things have an influence in the market as well beyond the earnings. So why don't we go into an example that we like from this past week, and is the Meta stock. And maybe if someone's watching and it's the first time that they want to start looking at earning reports and how to do it, what to look for, what are some good indicators.
Yeah, let's do it. Talked about it, and I think it's a really good one to showcase. So I don't know if you can see my screen, but
I
here's the website. It's investor.facebook or investor.fb.com. You're more than welcome to visit this website on your own as well. But this is the press release and investor relations that they put out every quarter. Every quarter, companies will put out a note just like this, where they put out all their accounting details. And Google does something similar. If you don't want to go into individual companies, I'll actually pull that up too. I really like the way Google put it together. But the main thing you need to take away from this is the accounting of revenue. Revenue is so important. If you've never taken an accounting class, highly recommend it. Even just a couple of YouTube videos on accounting, just so you know how companies do their financial reporting, how they tell the world how much money they're making, how much their sales and operations are bringing in, right? It's all about revenue everywhere you go. And so you do have an idea of how much Facebook has grown just by the top line here. And this is looking at it from a 1 year perspective. So from September 30th, 2022, and this is like 27 billion to 34 billion. So Facebook has had a 23% growth in 1 year, which is insane.
That's pretty good, I was going to say, because in early stages of companies and startups, when we're talking like early days, first 2 to 3 years, what investors are expecting is that month over month, 20% growth, so very fast. But once companies become big staples beyond unicorns like Facebook, the growth tends to stagger. So seeing a 23% growth on Facebook, it's pretty amazing, and I believe it's mainly driven by their ads business performing incredibly well this
Yeah,
year after they had a difficult year last year recovering from the pandemic numbers. So just to
exactly.
recap, in here what we're really looking for, so you don't need to understand the whole statement, but what we really want to see is growth, year over year growth.
Exactly. And then I'll even touch on the next one because as an investor, you also want to see costs go down. And they actually did have costs go down by a little bit. For a big company like Facebook, you always wonder where is this cost coming from, whether it's headcount or maybe they're improving their technologies or the way they do business. I don't know exactly because I haven't read the full report, but those are very important things, right? So you want to see growth and you want to see a cost cut, because that means the earnings per share is going to be higher. And so that's what this is down here: earnings per share and diluted. We won't get into the whole accounting of it, but the diluted earnings per share is the most relevant number that you can think of. So looking at your stock price, the value of your investment going up, that's where you
Was cut down earlier in the year. There were massive layoffs across tech and different companies trying to become more of a lean corporation, which obviously comes with bad news for people who lost their jobs. A lot of the cost for Meta this year was also in headcount.
exactly. If you look through the whole report, there's quite a bit here to digest, and every human will have a different take on it. So the way you looked at it versus the way I look at it versus the way you as a viewer are looking at it, you may have a different sentiment. And sentiment at the right, while I may look at earnings and the cost cutting as positive, you just honed in on like how that's negative because of the layoff. So that sentiment is very difficult to quantify and really predict how it's going to appear on prices. If you do that over and over and over across every stock out there, you have endless combinations of price directions.
That's why sometimes the stock market can be so confusing. In some
Exactly.
cases, despite bad news or things that for one person makes no sense, then stocks are still performing pretty strong for some companies. We analyzing different stocks. It was something interesting for Meta here, and thanks for walking us through that, is that they had this really good reporting, right? But at the same time, in the same week, they're being sued by 41 states, claiming that their social media harms children and teenagers. So I wonder how that's also going to influence the stock, right? Because it's pretty big news, and also not the first time that they are involved on this type of lawsuit.
Yeah, absolutely. And I just pulled up the Google one too, just so viewers can see like the difference and how easy you can actually get earnings data these days. They're sued all the time, right? United States of lawsuits. So please don't sue us. This is not financial advice. This is just regular information for your education. But and that's a disclaimer there to protect us. But in the reality, anyone can sue anyone. But this one is particularly interesting because forward in this space, it's kind of funny because Facebook huge
Is
headquarters in California, and so is all of Silicon Valley, right? And they're basically suing one of their own. But I think it's normal, right? And I think it won't change much. I think Facebook will have to pay, so that could get really expensive, but I'm sure they're going to drag this on for months before they pay any kind of fee back to users, or I don't really know how users will actually showcase how addicted they are, right? I mean, we all use Instagram. Our whole life is on social media these days. And so it'll be interesting to see how this one plays out.
it's a hard battle to win for sure for all the states that are being part of the lawsuit. What's interesting is that they're pushing for more protection for people underage, teens and children, and how they can control the features to protect people under 18. So that's still something that it's on Meta's hand. So let's see how that unfolds, and we'll probably will be reporting more on that in our newsletter that we share every Saturday. And you can subscribe very easily. Just go to www.investio.io, and there you can just drop your email and you'll get our newsletter every Saturday. Another one piece of news that really makes me happy is that there was a woman who won the Nobel Prize for Economics this month, Claudia Goldin, a Harvard University professor. Yes. And her work is really interesting. She was like focused a lot on trying to understand the impact of the workforce and women, or the dynamic between the women and the workforce, and how women's participation in paid employment did not necessarily increase over time like it does for their male counterparties, and especially when you have your first kid. So she dedicated a lot of her time and all her research basically to study the labor market in the US for women specifically, and how we could close the wealth gap in between male and females.
Yeah, I mean, it's a step forward in understanding the problem. It's still up to us to close the wealth gap. Investing remains one of the best ways to close the wealth gap. Income is still an issue. It's at the government level, and hopefully policies will come out very soon for this to really equalize everybody's earnings, pay rate when it comes to investing. That's the best way to close the wealth gap. It's all about investing and learning about compounding. So it's up to you. Woman Nobel winner on her own. This is a big deal.
Correct. Really happy to see that this topic it's also been bring up in the mainstream. And one of our book recommendations for this month was her book Career and Family. Just have a look at it. It talks, as you were mentioning, Joyce, the also the impact of the socio-political infrastructure on this pay gap. Lots of interesting ideas to look at there. The opportunity where you can have the full control of closing that gap is through investing, instead of relying purely on the systems to change, because right now we're still really far from that. She also talks about greedy jobs, so this really high paying jobs that make you go full on the race and leave no time to have like a life outside of it, and have a family, for example. Greedy jobs that pay really well, and you can have a successful career, but it just makes it difficult to have a family, and marry or have a partner, and fulfill maybe another side of dreams that for some women it might also be having a family. It's a super interesting book, Career and Family by Claudia Goldin. We also do books recommendation podcast every week on the newsletter, and that's the one we chose for our end of month wrap up.
Speaking of investing and winning, Bitcoin's on the rise, and I'm not a Bitcoin sweetheart, but I know you are. And let's talk about that as well, because the FTX scandal is really incredible to watch. In hindsight, we're gonna look at it and and really think like, yeah, what were they thinking? Watching the whole story develop and seeing Bitcoin pretty much become this year's best investment, which, I'll say it. I'm not a Bitcoin person and I'm not selling it right now. Interesting to know that the government is getting involved. The whole FTX thing is unraveling and regulatory changes might be coming soon.
It's hard to believe it's been almost a year since FTX filed for a bankruptcy. Like they did it the first week of November. And it happened on a year where it was bad for crypto. You know, we had the Terra Luna scandal early in May, and then just to make it worse, FTX happened. They were one of the major exchanges for crypto. Them going down obviously contributed to what we were talking earlier, right? The sentiment of the industry, like just going down. It's been bad. It's been a bad year for crypto, but it's been interesting to see the resilience of Bitcoin. In October, they hit their yearly high. So it's a big month for Bitcoin. And it's also strange because it's when the FTX case kicked off. Like the trial kicked off in October, and yet Bitcoin had their best performing month of the year. So it tells a lot. I think there's speculation and expectations around the outcome of the trial and how that's going to influence the regulatory environment, as you mentioned. Beyond FTX, the possibility of having a Bitcoin ETF in the US probably also driving the price high and just the resilience of Bitcoin at the moment.
Just to backtrack, ETFs, exchange traded funds, they are basically like a bulk product, and this one is being written by BlackRock, right? So it's giving Bitcoin major support. It's really bringing Bitcoin into the main scene by having this kind of presence and being presented to the SEC this way, right? The Securities Exchange Commission. It's not yet out. It's still under revision, but it is potentially a massive ETF to hit the markets and a new take on Bitcoin that I think people are looking for. Bitcoin is extremely volatile. It trades 24/7. It's had very, very crazy price swings in the past couple of years, including this year. So it's relieving to see it coming to Wall Street. I am still very skeptical, but I did, like as I told you before, I did buy crypto a few years back, and it was a good investment. I sold it eventually, and reinvested in other asset classes, but I'm skeptical on the full adoption of this thing. We should do a podcast on that. It's
We should
very
definitely
cool.
talk about it since we have different views. BlackRock lobby power is massive in the US. So this is something to definitely keep an eye on. But as always, do your own research and just don't put your money on things that you don't understand. This is financial advice, but it's really important. Do your own research. Make sure you understand where you're putting your money. And we're going to keep a close eye on this. I'm like super interested to see what will happen, both with SBF, Sam Bankman Fried
His
trial.
girlfriend.
Yeah, it's been dramatic, like a love story that ends bad. Screenshots. He actually said that he was acting on best faith and under legal advice. So I'm curious to see what was the legal advice that he was actually getting. So yeah, let's see what November brings. That's something we will be keeping an eye for. Another interesting thing that happened on this month was one IPO of a brand that I find very difficult to pronounce. Yeah,
Birkenstock stock.
exactly. And the reason why it's important as well is that this year has been a slow year for the IPO market. Not many companies getting their feet out there because of the conditions of the market in general and
Yeah.
maybe a more pessimistic sentiment on investors. So in October, no, September, we had Instacart, for example, and in October, we
Yeah.
had Birkenstock. But they didn't do too well, right?
I've had a complex relationship with IPOs. Every IPO that I've ever invested, I lost money in. And so I think a note to take away is maybe wait a little bit before you jump in the bandwagon, right? Instacart was a very impressive IPO this year. I think there was a lot of talk about it. Birkenstock as well, because it's such a heritage brand. It's been around for so long. But when it comes down to trading it on the stock market, we actually don't know what Birkenstock sales look like month to month, quarter to quarter. And so when they enter the IPO market and, after the hype is gone, like, who's trading this thing? Why are you investing in it? But it'll be a story we keep an eye on. I think Birkenstock is completely interesting. I love the shoes, but I don't know if I would invest in the stock realistically.
Well, I think those are probably some of the main news we wanted to highlight for October.
100%. But before you go, if you haven't subscribed to our channel, click below, subscribe and like this video. It helps us tremendously, helps us continue this channel and grow this channel. And if you haven't subscribed to our newsletter and waitlist, our app is coming out in a few weeks. Subscribe below at www.investrio.io and we'll get you on the newsletter distro.
See you soon. Ciao.
See you soon. Bye.